Hello and welcome to Business Today Television. I'm Siddharth Zarabi and you're watching Easynomics. On the show today, we kick off our coverage of the Union Budget for 2024-25. The full budget likely to be presented sometime in the third week of July. And joining me on this episode today, Axe the Tax, that's the big point that we are raising, are two of India's most well-known direct tax experts, Dinesh Kanabar, the CEO of Dhruva Advisors LLP, and Ved Jain, Senior Tax Advisor and former President of ICAI. Welcome to the show. Dinesh, I'll start with you. There were expectations prior to the interim budget that given the fact that it was poll season and there was a big election coming up, that the Finance Minister would tweak some of the provisions related to income tax, especially with the middle class in mind. That hasn't happened. And in the run-up to the full budget, there's again a laundry list of expectations. Where do you stand on the likelihood of something for the middle class in the forthcoming budget as far as income tax is concerned?
So, Siddharth, if I could first begin with humor, which I always have, that if you look at what are the expectation and forecast before the budget and what you see happening after the budget and you compare the two, any resemblance is purely coincidental and unintended. So a huge amount of things go around being spoken about, rumors, gossip, whatever. That said, there is an expectation and there is a proposal which has been put forward that probably the threshold limit for tax exemption needs to be expanded, extended. And I, for once, would be very much in support of it. And I will tell you why from a statistical purposes that makes sense. So every 1 lakh rupee reduction that happens in the threshold limit really takes off a revenue of about 1,37,500 crores from the government kitty. And that's the amount. So here is so about 15 times that amount is the amount that is left as a purchasing power in the hands of the middle class. The revenue foregone is just about 1,37,000 crores. And assuming that these are the people who need the money and who are going to put the money into the economy on account of purchases, whatever, the government's kitty on GST is only going to swell. If you look at the numbers over the last few months, Siddhartha, and it's actually very heartening. That the revenues for indirect taxes, GST, we are almost touching 2 lakh crores. It has become, just a year and a half ago, 1 lakh crore was news. Today, 2 lakh crore is the news. So just shows how robust are those collections. If you look at the direct tax kitty, it is more than the budgeted revenues by 26%. Now, that is not something which is very, very usual. So with such a lot of robust collections, if the government reached out to the middle class, gave that extra money back into the system, the economy, as it is, we are talking at two things happening. We are talking about revival of the FMCG, everything else that needs to happen, and money going to the middle class. Both of those could be achieved if the government did increase the threshold limit.
Okay. Ved Jain, let me come to you and also add the fact that the government's push in the recent past has been to try and push income taxpayers towards the new tax regime and say that, well, that is giving you some amount of relief, move out of the old tax regime, go into the new tax regime, and that is the best that we can do. That was what was said so far. Will that change, Ved Jain?
Siddharth, you are absolutely right. Now you see with the Finance Minister, Mrs. Nirmala Sitharaman, having propelled and having navigated and having, I believe, tried to popularize the new regime. Now there is a catch-22 position. See, on the one hand, there is a pressure, there is a demand that the social benefit under, say, TC or other medical or other should be increased. At the same time, I believe there is a new regime which says that no exemption, no deductions, and they will like to have this 7 lakh rupee exemption available on their. Now, these are two contradictions. One, ATC, ATD, and other benefits are meant to create a social security network. At the other end, the exemption less threshold was to propel consumption so as to provide more money in the hand of the middle class taxpayer, so that he goes out in the market, spend the money, and which propel and which accelerate the economic growth. Now, these are the two different thought processes. Whether the benefit should be given to the taxpayer by expanding the social security network, or by increasing the threshold limit, or by increasing the overall limit. At the same time, whether we need to give more money, more cash flow, more funds in the hand of the taxpayer by increasing the threshold without any exemption. So now, in new regime and old regime, the finance minister's compulsion will be that she will try to navigate and she will popularize the new regime more. So I don't think that any further concession can be expected under the old regime. What we can expect is that from 7 lakh rupee threshold exemption, which is presently available, and with 50,000 rupees further deduction, standard deduction available. So all she can tinker with is to make it more popular, that she can say, all right, there is no tax up to 9 lakh rupees, or then she increases the tax slab from 10%, 20%, 30% for bracket which she have formed. She relaxes a little bit more on that end, because there is a lot of demand that this 30% threshold tax rate, which comes at a very low rate, about 15 lakh rupees, should be increased beyond 20 lakh rupees. So I think this can be the pressure. And since she was the finance minister who introduced the new regime, and she has been always conversing for the new regime, I don't think that she will, in this budget, will try to give benefit under the old regime so that people get again lured to the old regime. She is trying to move the taxpayer under the new regime, and that's why she will try to make it more popular. And one way can be to attract these people in the new regime will be that she can increase the standard deduction also, which will partially give the benefit to the people, the salaried people, but at the same time may not give the benefit to those people who are not having income from the salaries.
Dinesh Kanabar, do you think the Finance Ministry and the Income Tax Department has achieved, at least so far, what it had thought in terms of the early gains from the new tax regime? Obviously, the switchover was not expected within 1 year, and the scheme has been a little slow to take off earlier. What do you think is the reading within the Income Tax Department with regard to the new tax regime?
I see, Siddharth, is that if you look at, and I know we are talking about individual taxation, but if I just for a moment focus on the corporate taxation, virtually 80% plus of the corporates and almost 100% of the large corporates have already moved to the new tax regime. And to my mind, that new tax regime makes absolute eminent sense. There is no point in having multiple deductions and exemptions which are then contested and argued for years on end before tribunal, courts, etc. And there are issues with regard to how to compute them, etc., etc. And virtually, if I may say so, the revenue actually, when it is granting you a deduction or an exemption, feels that there is somebody out to jibe monies from the tax office, and therefore finds ways and means to not do it. Instead, have a lower tax rate, and that's the simplest way. Similarly, I would like to believe that even for individuals, it just makes sense to have a higher threshold limit, have a few basic deductions available, but really not go on the exemption and deduction regime. I think, again, they promote only litigation and nothing more than that. And whilst this has been still slow to offtake, remember, you've just hardly seen one filing, the second filing is happening as we speak. I would see people move more and more and more towards the new tax regime. And I would see that even in this budget, a lot of emphasis will be done to provide further benefits for the new regime, leaving old regime just as it is. And I personally, as I said, would very much support it. I think it makes a lot of sense. There is no point in trying to give incentives and deductions just as the government, for example, on promoting new undertakings, went to PLI, which was a direct benefit rather than to try and give tax reduction. That's the way to go.
Dinesh, just one quick follow-up. From 2019, when we saw that big corporate tax cut to now, and there was also a sunset clause that seems to have kicked in. What are your own expectations? Will the government provide some further leeway in that regard?
Yeah, so we had a new regime, a 15% rate of tax for new manufacturing companies. I recollect that when the Prime Minister was in 2019 in USA, met up with a number of CEOs who expressed a desire to invest into India, into the manufacturing sector. And he came back to say that if you set up a new manufacturing company, then the rate of tax in perpetuity would be 15%. There are, of course, some issues on drafting of those provisions, but by and large, very much welcome provision. And I, as a part of FICCI's tax outreach to the government, made a very fervent request even before the last budget to go back and say that this regime needs to be extended, and extended not year on year, but expand. It was extended by a year on account of COVID. But what I thought was that here is India looking at substantial amount of investment in chip manufacture, in new technologies, defense manufacture, all of which are large projects, all of which take time to fructify. And therefore, the request on behalf of FICCI was that can we have at least an extension of that new tax regime for manufacturing companies by 5 years. And we have made that representation. The proposition again is that why only companies, why not undertaking, and one can keep on arguing back and forth. But I do hope that the government does consider this and grant a further extension of 5 years and put a rate of 15% tax for new manufacturing companies.
Mr. Jain, do you support that demand for an extension?
Yes, I have been conversing a lot that this 15%, this tax bracket for new manufacturing unit can make the India only on that basis at the global capital, manufacturing capital. See, we have been conversing all along that India will be the best alternative to China, looking to the geopolitical situation. And the MNC, the multinational company who want to locate, or who want to have a secondary source of manufacturing base, I believe India is best suited. We have a stable regime, we have a good policy, we have the infrastructure, we have a good GST system. Now, the only thing is that when you compare the tax rate, which is the direct taxes, Indian tax rate should be competitive with reference to other countries which can offer the similar facility. So that's why 15% rate of tax rate was very competitive, and we were I think that could have been the leader on that part. And we are not going to lose revenue. We are going to earn revenue because we will, in the process, will be making more and more investment to flow into India. More and more capital coming into India, generating a lot of employment, which will spur growth, which will give economic growth, and which will definitely help in generating more revenue rather than losing revenue. So I am of the view, and I endorse fully with Mr. Kanavar's views, that it should not be year-to-year basis, because many industry, when you set up, is not set up in a year or two. Because they put a condition that your manufacturing facility should have started on or before 31st March 24 or 25 or 26. I believe it is expecting too much. We are not interested in small industry. We are looking for a larger industry, etc. So I believe at least for 5-year extension should be given. That can fulfill the dream of making India the truly global capital of manufacturing, and also making India as one of the biggest economy of the world, which we are hoping that we will cross. I think now we are 5th, we will become the 3rd. And then in 2047, we are looking to become India's one of the strongest economy of the world. So that is the goal and the mission, and that can happen only when we, I think, fine tune or at least make the policy in a manner where the investment flows into India and that we really are able to generate employment.
Mr. Jain, in any case, the earlier announcement had not anticipated COVID. So 2 years or more actually could be a sort of what you would call as a standstill period as far as companies are concerned, because not much corporate activity as far as new manufacturing decisions happened during that period. So that logic also supports the demand for an extension.
Yes, you're right. I said 2 reasons. One, those who were supposed to take decision could not take a decision, and even those who have taken a decision could not start manufacturing because there was a delay of 2 years. Say in 2019 September we announced this policy. I believe it was in 1st September 2019 it was introduced, and then March 20 we had this COVID. So somebody had planned out to come out with a manufacturing. Sometime it takes 2 years, 3 years to set up a new manufacturing unit before it goes into the production. So there has been delay from that part also. So for both the reasons, I think, and 2 years are required. But as I said earlier, it should not be a short-term policy. Because when we look into 15%, what we are assuming is that we are losing revenue as against 22%, we are getting 15%. But we must keep in mind we are not losing revenue. We are earning revenue because it will be add-on. New investment is flowing. It is a new manufacturing facility which is coming up, and how much employment we can create out of that. That employed, the people's getting employed will give more purchasing power in the hands of those people getting employed. They will create a demand, and that demand will create its own investment. And in that process, the revenue will go up not only by direct taxes, but then indirect taxes also. When the consumption increases, purchasing power increases, obviously there is economic activity which increases, and all around growth will be there.
Mr. Kanabar, one of the other features of the past 10 years has been far lesser issues when it comes to frequent tax policy changes, or that dreaded word of retrospective tax amendments that led to the charge of tax terrorism. Looking forward, because this is the first budget of the third Prime Ministership term for Narendra Modi, what would you say this budget should signal as far as overall direct taxes are concerned, to provide a sense of certainty, surety, both for corporate as well as individual income taxpayers?
It's a very interesting question, Siddharth. And again, as I mentioned that as a part of FICCI, when we had a conversation with the Revenue Secretary, our basic thrust was to indicate stability. There is no need for frequent changes. And the suggestions that we made were only twofold. One was to go back and say that, can you provide us ease of business? So, for example, the number of requests which were made, there is an issue on withholding taxes. Now, withholding taxes is where the deductor virtually acts as an agent to give money to the government. There are people who otherwise are obliged to pay their own taxes. When a person makes a remittance, he withholds. Now, why should that person who is subject to withholding be required to look at multiple rates and interpret whether a withholding should come under Section X or a Section Y? Why not ease everything to come back and say, there is one withholding tax for salary, another for negative items like race horses and speculation income, and third, a common rate for everything else. That was number one. Number two, on TCS, we came back to say there is a tracking mechanism, and why should tracking mechanism be at rates like 20% as it is today? So that ease business. And the second thing was, how can we sort of ease off litigation? And a number of recommendations that were made to say that for resolving disputes, how can there be a negotiated settlement? How can we revive the settlement commission? And a number of issues in and around that. So I would actually agree with you that we do not need too many changes. We need to provide a stable platform. This is the time that the government should come back and say, there is nothing changing. We are providing the same platform for growth to all of you, and we are easing things so that you can do things in a simple manner, and litigation will no longer come to haunt you.
Mr. Jain, one of the issues that is being commented upon is the recent statement by SEBI chairperson, and where she sort of raised this question mark as far as investments going into speculative market trading rather than in more productive sectors, and that's kind of led to this belief that there is some sort of hint that we can take from those remarks regarding taxation as far as capital market is concerned, particularly F&O. Do you think there is likely to be some tweak? We know the capital gains regime that prevails both for short term and long term. Do you sense the finance ministry and the government will bite the bullet on this one?
See, there are two different objectives to be achieved. If I get something what the SEBI chairperson was saying, she said there is speculative transactions. And I believe speculative transactions are always short time, and there is no tax concession as so far as I see in direct taxes in case of any speculative transaction or in a short-term capital. And in the case of a long-term, it cannot be considered to be a speculative transaction because the period sufficiently have been expired Nobody can say that it was a speculative, it was a purely an investment. Though I do agree that there is a need to rationalize and to make it more simpler, the regime of capital gain which we have today, because there are various methodology, various concession, various periods, etc. We need to streamline and bring it, simplify it. But at the same time, the social objective of curbing the speculative transaction or game or something, etc., I don't think that we should use the tax policy for that purpose. For that purpose, even on the cryptocurrency, which we have done last year, year before that, we have tried to pay taxes. I am of the view that we need to take a call whether it is permissible or not permissible. If it is not permissible, let's bring a legislation curbing and banning it, and not to tinker with the tax provision. So what presently regime says is that though it is permissible, but a tax regime itself is making it impermissible. The way we say the income will be computed, deduction will not be allowed, and the maximum marginal rate tax will be allowed. I do agree, any income which is not a hard-earned income, which is speculative, which is gaming, which is on betting, it need no concession. But at the same time, the tax policy and tax rate should be considering the fact of the real income. We should not drift from the real income. We should not try to create a hypothetical income. In that process, what we will have doing it, we will be promoting an illegal and we will be exporting income. So that should not be permitted. So the idea should be to streamline it, to regularize it, and to make the taxes, I will say, put higher taxes, but don't use this income tax as a tool to ban that social objective.
Absolutely. Income tax policy should not be used for behavioral change. That is left to other aspects of governance. Mr. Kanabar, Prime Minister Narendra Modi had also spoken about the capital markets in some ways should be paying up their due share. Nothing much happened after that. But the larger question that arises is that when share market trading or F&O, which is a component of the market, is called speculative, is this something that should be dealt with through tax policy at all? The point that Mr. Jain is also making.
So the way I would look at it is that as it is taxable. Anything which is not supported by a delivery is speculation income. It is taxed at whatever are the appropriate rates, whether it is on account of individuals or in account of corporate bodies. And that provision exists. I can actually quite relate to the point being made that F&O has become rampant. The SEBI chief has spoken, the Prime Minister has spoken, the NSE head has spoken, and NSE head was proactive enough to come back and make a comment to say that people should be extremely careful. And if that has to be done, as we discussed earlier, there has to be a framework that needs to be provided. By putting a tax deterrent, it is not going to go anywhere. So if you go back and say that speculation income will be taxed at a higher rate, and if it is F&O, it will be at a higher rate, that's not going to lead to the changes that we are putting. Whatever framework needs to be put, and tax has to be a consequence of that framework rather than the other way around. But the concern is, and I would actually agree with the concern very wholeheartedly.
Let me take another point, and this is real estate. We are seeing in the recent past, especially post-COVID, that houses have become more expensive, and the premium luxury housing segment is what is flying off the shelf. Affordable segment of houses defined as perhaps up to 50-60 lakhs or thereabouts, due to input cost increase as well as other reasons, is not finding so much favor. So we have a capital gains regime for housing also. Is that also an example where the government should have a holistic approach to all manner of capital gains treatment rather than just singling out what some people feel is a bubble as far as F&O is concerned?
Siddharth, I really can't put my arms around the relationship between F&O and housing. Insofar as housing is concerned, the government actually put in a limit to go back and say what deduction should be available for a second house. Government made a proposition with regard to exemption of capital gains, which can be reinvested. We also had the issue on insurance policy. So really, I don't know if there's anything specific which one can do in and around F&O. Today, we are looking at housing, and Siddharth, you are seeing the housing sector boom, the real estate sector boom over the last few years. Remember that that boom has happened maybe after almost a decade of lull. So an industry goes through its ups and downs. We are all aware, for example, that in many of the economies like China, real estate is almost 30% of the GDP, and that, of course, has its own challenges. And we are seeing how China is facing a deep challenge with regard to the fall in real estate. India, still real estate is a single-digit contributor to the real estate. There is a long, long way to go out there, and I don't think one needs to tinker around with that.
Mr. Jain, do you agree with that? Because just for the sake of argument, I am raising this question that as far as speculative activity is concerned, the housing market currently in India, at least in certain sections and certain categories, is well into speculative territory. Prices are going up, and the prices that we are seeing are way beyond reality in some places.
I think we should look into the benefit in substance rather than in form. See, in case the capital market is doing well, it is doing well because of the economic growth arising it. Now, I think in a short-term measure, we say that we will like to tax it in the manner because there is more money flowing in and more capital gain, and why should be a concession rate of tax on that basis? Come on, flowing in. I will say there is no reason. See, the underlying principle, frankly speaking, is that for capital gain to be taxed at a concession rate or exemption being provided is that when you swap one investment with another investment, you are not making any money out of it because you are just swapping the one asset with the another asset. And as regard the tax rate in the capital market it is to spur investment. See, at the end of the day, why some taxation policies are made to look at the overall economic growth. We levy taxes just not one to meet the overall expenditure and also to give direction to the economy. Now, the objective of the economy, if it can be achieved through some tweaking the tax provision, and one of the provision is that we want more money to come into the private sector investment, and that's why we want the savings and the flow of the money should come through capital market, so that there can be more money put into industry, more money can be put into business. And that's why we follow a concession rate tax policy. We say that you make investment in capital market, and if it is a long term, we will tax you at a 10% or certain exemptions therein. So there is a reason that this should continue, and because India is still at a developing nation, India is not a developed nation. And sometimes we try to compare ourselves when we want to tweak the policy. Sometimes we look at a model of a developed nation, and sometimes we look at a model of a developing nation. But we must be, I think, straightforward and keeping one track that we are on the path of becoming a developed nation. And on a path to become a developed nation, we need to spur investment. And spur investment can happen only when our tax policies are tweaked in a manner where more and more investment flows into India and also by Indians also. So that is why I am of the view that capital market is the only driver which can make more investment to happen in India, generate more employment, and make India truly what kind of economic leader in the world.
Mr. Kanabar, as we wind down the show, what are the other one or two major expectations as far as income tax is concerned?
There are a couple of very interesting propositions which the government is considering. One of the things, for example, is thanks to the robust capital market in India, there are a number of companies which are operating in India, but which were set up as overseas companies, Singapore, etc. And they all want to relocate to India. And one of the significant proposals to the government, and the government is looking at very closely, is whether you can permit merger of a Singapore company into an Indian company in the gift city in a tax neutral manner. A very, very important proposition. Another issue which has been presented to the government, and I don't know really how far this will go, is that if you have to manufacture in India and you have to move your manufacturing several notches above, there is a need for looking at a regime for R&D. Today we have a separate set of provisions which are applicable to income arising out of R&D. They are very, very restrictive. They only provide for a tax concession when the R&D developed is outsourced and given to somebody else. But most times you develop your R&D manufacture yourself. So how can one put in arms in and around that? So those are some of the things which the government is considering, and I'm hoping that the government will bring in some of these provisions which will be of great help.
Mr. Jain, final question on the show to you, the same one really. Any other major expectation that we should factor in at this stage?
Frankly, Siddharth, in this budget post-election, I don't think any substantive changes coming up. Maybe some fine-tuning of the threshold limit and some this 115 EVA manufacturing, which became a sunset clause, may be extended. But on the other side, administrative side, I look forward that the tax regime need to be a little bit more fair, equitable, and in the sense ease of doing tax compliant. Now with GST getting all digitized and all data being available, we need to revisit the TDS and TCS and the compliance burden under the income tax law. And many of these provisions are overlapping each other, which are making the life difficult of the people, taxpayer on this, particularly on that aspect. So there is a very urgent need to revisit some of the provisions to make it absolutely equitable and both taxpayer and tax administration, so that we can bridge the gap between the tax administration and the taxpayer.
Well, we'll have to wait for what the Finance Ministry mandarins come up with come budget day. Viewers, the date of the budget presentation not yet known. The first session of the current Lok Sabha is underway, and we will get to know possibly in the next 3 to 4 days the date of presentation. I will continue our coverage of budget related expectations on other shows. For now, I want to thank Mr. Jain and Mr. Kanabar for their time with us, and you the viewer for tuning in. We'll be back with more. Until then, goodbye.
No relief for Delhi Chief Minister and Aam Aadmi Party convener Arvind Kejriwal. Kejriwal has been sent to 14 days judicial custody in the Delhi liquor excise policy case being probed by the CBI now. The AA